Networks, ECE 542 at NC State. My name is Kyle Beard. I'll be presenting today on the neural networks to quantify behavioral predictions of the stock market. Other teammates include Priyam Kaship and Edward Marcos. So the motivation and goals behind this project is, as everybody knows, Americans and other human beings around the world rely on the stock market to provide adequate long-term returns on their retirement and other financial accounts, such as Roth IRAs and 401ks. A plethora of human behavioral and instinctual intuition goes into the decisions of what you're going to invest in, which stocks are right, and how many of each you would need at the certain times throughout your career to plan your retirement. Now, the issue lies with the stock market itself. Sometimes it feels like it's a gamble. There are short-term gains and losses because the behavior of the stock market is very unpredictable and it may make or break any investor with a bad decision or a good one. Overall, the status of the market can be categorized as either bearish, which is declining, or bullish, which is inclining, and it oscillates in waves. Nobody knows when a market will be bearish or bullish or when that transition will occur. Therefore, it is very difficult to understand the stock market and it has an unknown future. So unlike normal circumstances where people would look at a bunch of different metrics of each company, the purpose of applying a neural network in this case would to be training a model based on historical data and try to pick up any trends that the human eye cannot see. So for doing this, we're looking at implementing a recurrent neural network in a long short-term memory network, which would be able to predict the binary return of a stock over a time frame no less than a month. And it would be categorized as either being a positive or a negative return with no quantitative value. And then we'll be using Alpha Advantage, which is a API using Python and also Keras and TensorFlow. And we'll be able to read in any instantaneous and historical data for the performance of a stock, including the date, the opening value, the closing value, the highs, the lows, and also the volume of trade for that day. Then using this data, we'll be able to structure it how we want, and then scale it day to day, normalize it, and then look at individual stocks, as well as grouping stocks together and technological, healthcare and pharmacy, and also airline and banking firms to see if there's bigger trends that human eyes cannot see. So stepping right into it, the first stock that we looked at was American Airlines. We have a baseline vanilla neural network compared against the LSTM, and the vanilla multi-perceptron had accuracies which were just about random, 49.3 and 50.02, whereas at the LSTM we had much better mean squared error. You can see that when you come through here, we have all the different predictions of the curves that the graph should follow along the ticker. And you can see the little red lines of what it's predicting here. So this one thinks it's going to go up. This one thinks it's going to go up. Overall, we found that the LSTM had about a 60 to 65% accuracy. At any time in this video, you may pause and zoom in on the graphs. We apologize if we're speeding through quickly. Next up, we have Apple. Also, the vanilla neural network looked very similar to the previous one, almost nearly random, but this one's a little bit better. However, the LSTM still did better. The same applies for the banking with Citi and also with Pfizer, a pharmaceutical company. Stepping in further, we wanted to look at how airlines would work. So instead of doing a vanilla neural network here, we only implemented an LSTM. And what we did is we took the stock of American Airlines, Delta, Southwest, Boeing, and JetBlue, summed up all of their data, also normalizing them. That way there weren't any outliers or heavy pulling. And we basically saw if there were any trends within a particular market rather than an individual company. We thought that this process would then kind of give us a more insight of the future of the technology rather than the political business of an individual. Looking at this, we can see that there's very good correlations with the LSTM compared to what we would expect with a market along our test data. We have upward curves, good predictions throughout, and pretty promising. The same applies for banks with Bank of America, Citi, Royal Bank of Scotland, Wells Fargo, and JP Morgan. as well as health and pharma with CVS, Johnson & Johnson, Walgreens, Pfizer, and Procter & Gamble. And finally, with technology with Apple, Amazon, Google, Facebook, and Microsoft. Very big trend here. Technological boom. LSTM thinks it's going up. We'd like to thank our references at Alpha Vantage for giving us the data we need, as well as machine learning classification techniques for giving us some of the direction and guidance we would need to do this project. Thank you for your time.